Hello everyone. So today is one of the quieter days for economic data in what is a very busy week, although there are still a couple of noteworthy releases, like the UK construction PMI that is due in several minutes. The UK Purchasing Managers Index, or shortly PMI, measures the performance of the construction sector and the activity level of purchasing managers in the respective industry. The PMI has been gradually improving throughout the recent months and hit 59.9% in September, after 57.3% in August, with new projects increasing the need for more employment. In October, only a slight drop to 58.8% point is expected. So the figure above remains above the threshold of 50, which means an expansion of the sector is to be expected. Whereas a reading below 50 represents a contraction, while 50 indicates no change at all. A higher than expected reading should be taken as positive or bullish for the GDP, while a lower than expected reading should be taken as negative or bearish. So the biggest issue facing the industry now appears to be skills shortage, which could affect productivity following such a prolonged slowdown during the financial crisis, but overall conditions are improving. If that can continue in the coming months, as it is expected to in October, construction may contribute to GDP in the final quarter rather than subtract from it again. Now I'll give the floor to Max.
Vasa, thank you very much. Hello, everyone. I hope you have a great day. So yes, we are discussing, as Rafa has just said, the UK construction PMI data released today, which is out in around 6 minutes from now. And the expectation suggests that in October, the PMI will decrease to 58.8 points, down from 59.9 in September. And also there are some financial institutions around the world which suggest that possibly the PMI will cool down even more than expected on average, because last month we have seen a surprising reading of 59.9. Last month, namely in September, the UK construction PMI surged much more than expected. For instance, the Royal Bank of Scotland expects the PMI to decline to just 58.0 points, while Bank of America Merrill Lynch suggests a reading of 58.5. On the other hand, there are also some positive expectations around market participants. So there are some bullish suggestions. For instance, the bank Standard Chartered, which by the way has been very big for news today, as you might have seen already. This bank suggests a reading that the reading will increase to 61 point in October. So they are the most bullish on this reading today. At the same time, if we take into account the average expectation, we are still going to have the negative surprise trading strategy today, and we have the cable for discussion, as you can see, because this currency pair at the moment has negative sentiment of 53%, and actually the sentiment on the cable has deteriorated in the past 24 hours of trading. Speaking about the pending orders on the sterling dollar currency pair, they have also actually become more bearish since yesterday, and now the majority of them in both 50 and 100 pip ranges from the current spot price are set to sell the sterling versus the greenback. And speaking a bit more about the sentiment provided by other market participants, by Oanda, Saxo Group, and Daily FX, we see that their sentiment is actually mixed, being that Oanda and Saxo Group traders are bearish on the sterling, while Daily FX traders retain their positive views on the matter. So, speaking about the current the trading strategy itself, we see that at the moment the sterling dollar pair is trading at 1.5414 level, and if we have a look at the development of the last hour, actually the pair has been somewhat losing value, possibly already somewhat pricing in the upcoming data release, but we will receive the numbers in some 3 minutes from now already. If we project the potential market reactions after the data comes in 2.5 minutes from now, let's have a look at the previous market reactions table, which shows the reactions for all the pound currency pairs for the last 5 months from now, and the average reaction for the cable actually ranged from the average reaction was 24 pips, but it ranged from just 10 pips back in September and up to 35 pips in August. But nevertheless, if we take the average reaction as the benchmark, we can project the first take profit level to be located around the first support zone, which is the major level of 1.54. And in case data is really disappointing, we also can see the pair tumbling even further down to the second take profit level, which is located some 35 pips below the current spot price. And actually, it is a very strong support because this is the daily S1 and the weekly pivot point, which are located at this mark. So they are quite likely to stop the pair from falling in case we have a really negative data from the UK. At the same time, we cannot exclude the possibility of the positive, of the bullish outcome. And in case of that, we can see also the pair rising potentially into the area of 1.5450, maybe somewhat below these levels, especially in case we don't have very strong surprises. For instance, Standard Chartered Bank is projecting at the moment. So I have just some 50 seconds to go left till the data will be published in the chat section. So I will shortly mention the technical indicators on the cable, which actually are pointing to the upside at the moment. On the 30-minute time frame, the time frame which matches the current data release. So they actually go against the current market sentiment, but of course all the reactions usually depend on the data, and we will see the numbers in some 20 seconds, and hopefully we will see the initial market reaction either bearish or bullish. But the expectation is quite negative at the moment, but we will see that in a couple of seconds already. So let's just wait for the numbers to come through the chat section. Actually, what do we have? We have the perfect match of the numbers. So the UK construction PMI actually declined, but perfectly in line with expectations. To 58.8 points, down from 59.9 in September. And actually, therefore, as we have no big surprise from the numbers, it also makes sense that the pair is not reacting in a way we could actually project, because it was quite anticipated by the average market expectation. Actually, the pair has not moved almost at all in the past minute, but as you can see, in the past couple of hours, actually it has declined somewhat and regained some 10 to 15 pips in the last couple of minutes. So it's actually pretty muted trading at the moment. Let's see how the situation develops in the nearest future. I also can guess that the markets are waiting more and focusing more on the US ADP and US non-farm payrolls data on Wednesday and Friday, respectively. We are quite likely to see stronger market reactions then. So tomorrow, actually, we are going to discuss the ADP US labor market numbers tomorrow, along with the UK services PMI tomorrow at the same time as today. So feel free to join us tomorrow. But for now, I guess that will be all from my side on the technical part. Thank you very much for listening. I wish you all a great day ahead, and I would like to give the floor back to Wafa just to wrap it all up.
So yeah, as we have seen, the results were just the same with the expectations. So that's it for today. Thank you very much for your attention, and have a nice day ahead. Goodbye.